Are you working for your money, or is your money truly working for you? Right now, as we move through 2026, many of us feel like we are running on a financial treadmill. You work hard, you earn a decent salary, and you avoid the flashy lifestyle that the internet tries to sell you. You might even be proud of the fact that you have a significant amount of cash sitting in your savings account. It feels safe, doesn't it? Seeing those numbers in your bank account gives you a sense of security for your retirement. But here is the hard truth that almost nobody wants to tell you directly. That feeling of safety is actually a dangerous illusion. In fact, for many people in their 40s and 50s, the very thing they think is protecting them is the one thing that is keeping them financially stuck. While you are sleeping, a silent thief is reaching into your bank account and taking a small piece of your future every single day. This thief does not use a mask or a weapon. It uses simple mathematics and the steady march of the Consumer Price Index. By the time you finish listening to this discussion, you will realize why your current strategy of being safe might be the most reckless thing you can do for your family. We are going to pull back the curtain on why most investors stay broke, despite their best intentions. And more importantly, we are going to look at the exact psychological shifts you need to make right now to stop the bleeding. Think about that feeling when you check your balance on a Tuesday afternoon. You see a large number, but somehow you still feel behind. You see your peers buying investment properties or talking about their growing portfolios, and you wonder what they know that you do not. The difference is not that they are smarter than you. The difference is that they have stopped playing not to lose, and they have started playing to win. Let us look at the concept of loss aversion. This is a term from behavioral economics that explains a lot about human nature. Research shows that the pain of losing $100 is twice as powerful as the joy of gaining $100. For most of us, especially as we get older, this instinct takes over our entire financial life. We become so afraid of a market crash or a bad investment that we choose the ultimate losing strategy by default. We choose to do nothing. We keep our money in a traditional savings account, earning maybe 1 or 2% interest. In your mind, you think you have protected your $10,000. But let us look at the reality of 2026. With the Consumer Price Index running higher than your interest rate, your purchasing power is shrinking. If the cost of living goes up by 3 or 4%, but your money only grows by 1%, you are losing money. You are not losing it in a crash. You are losing it through a slow, invisible erosion. It is like having a leak in a bucket that you refuse to fix because you are too afraid of the water splashing. By the time you get home, the bucket is half empty, but you still feel safe because the bucket itself is not broken. This is the trap of the middle class. A study from the Federal Reserve recently found that a shocking 33% of households earning over $200,000 a year have very little in liquid savings. They are high earners, but they are low wealth builders. Why does this happen to people who are clearly capable of making money? It happens because they never learned the difference between income and wealth. Income is what you earn today to pay for your life. Wealth is what you own that pays for your life tomorrow. If you are only focused on your salary, you are just one bad day away from financial disaster. Wealthy investors understand that every dollar is a little soldier. And if those soldiers are just sitting in a bank account, they are not out there fighting for your freedom. They are just retired soldiers, waiting for the inflation monster to eat them. Let us talk about opportunity cost. This is the most important concept in all of finance, yet it is rarely taught in schools. Opportunity cost is the value of what you give up when you make a choice. When you choose to keep $50,000 in a savings account, the cost is not just the inflation loss. The true cost is the massive amount of money you could have earned if that capital was invested in the market. Historically, the Standard & Poor's 500 has returned an average of about 10% annually over the long term. Even if we are conservative and adjust for inflation, the real return is often around 7%. If you leave $50,000 in a bank account for 20 years, it might grow a little bit, but its value will likely be lower than when you started. But if you put that same $50,000 into a simple index fund, it could grow to over $200,000 or more. The gap between those two outcomes is your opportunity cost. It is a $200,000 mistake made out of a desire for safety. That is enough to fund several years of a comfortable retirement or pay for a child's entire education. Now, I know what you are thinking. What about the risk of a market crash? What if the market drops 30% the day after I invest? This is the primary fear that keeps people broke. But wealthy investors look at market volatility completely differently. They do not see a crash as a disaster. They see it as a clearance sale. Think about your favorite clothing store or a car dealership. If they announced a 30% discount on everything, would you run away in fear? No, you would probably be the first person in line. Yet, when the stock market goes on sale, most people panic and sell their shares at a discount. They buy high when things feel safe and sell low when things feel scary. Wealthy investors have a system that removes emotion from the equation. They use a strategy called dollar cost averaging. This simply means investing the same amount of money every single month, no matter what the news says. When the market is up, your money buys fewer shares. When the market is down, your money buys more shares. Over time, you end up with a lower average cost per share. You are effectively using market crashes to accelerate your wealth building. Instead of watching the news and feeling stressed, you can sleep soundly, knowing that a down market is actually helping you reach your goals faster. Another major difference is how we view debt. Most of us were raised to believe that all debt is bad. We're told to pay off our mortgage as fast as possible and never borrow money. And if you are talking about credit cards with 20% interest, that is absolutely correct. But wealthy people understand the difference between consumer debt and investment debt. Consumer debt is when you borrow money to buy things that lose value, like a new truck or a luxury vacation. Investment debt, or leverage, is when you use borrowed money to acquire an asset that produces income. Imagine you have $100,000. You could buy a small property in cash and earn a small amount of rent. Or you could use that $100,000 as a down payment for a much larger property using a mortgage. Now, your tenant is paying off your debt while the property grows in value. The return on your original $100,000 is amplified significantly. This is how real empires are built. It is not about gambling with borrowed money. It is about using the bank's capital to build your own equity. Of course, this requires a different level of discipline and education. But that is exactly why the wealthy continue to pull away from everyone else. They are willing to learn the rules of the game while everyone else is just complaining about the weather. Let us talk about the power of the income snowball. Most people focus on their net worth. They want to see $1 million on their balance sheet. But you cannot pay for groceries with net worth. You pay for life with cash flow. If you have $1 million in a retirement account, but no income coming in, you are still living in fear of running out of money. Wealthy investors optimize for cash flow first. They buy dividend stocks, rental properties, or businesses that send them a check every month. When your monthly passive income exceeds your monthly expenses, you are truly free. At that point, it does not matter what the stock market does tomorrow. Your lifestyle is protected by the income your assets produce. This is the ultimate goal of financial independence. It is about moving from a life of trading your time for money to a life where your money takes over the work. As we look toward the next decade, the window for this transition is becoming more important. If you are in your 40s or 50s, you have a massive advantage. You likely have your highest earning years right now, but you also have a limited amount of time before you want to slow down. Every year you wait to fix your investment strategy is a year of compounding you can never get back. The first 10 years of investing are always the hardest. The growth feels slow, and the sacrifices feel big. But after that, the math starts to take over. The second million comes much faster than the first. The third million comes even faster. But you have to start. You have to be willing to be uncomfortable today so you can be unstoppable tomorrow. Stop listening to the voices that tell you to just be safe. Safe is the new risky. In a world of inflation and shifting economies, standing still is the same as moving backward. Take a hard look at your bank account today. Ask yourself how many of those dollars are working for your future. If the answer is not enough, it is time to change your plan. Start by educating yourself. Learn the basics of index funds and asset allocation. Understand the tax benefits of different types of accounts. And most importantly, surround yourself with people who are already where you want to be. The people you spend time with will determine your financial destiny. If your friends only talk about spending money, you will likely do the same. If your friends talk about building systems and acquiring assets, you will find yourself doing that too. Wealth is not a secret club. It is a set of habits and a specific way of looking at the world. You have the tools and the information available right now. The only question is whether you have the courage to walk away from the illusion of safety. It might feel scary at first to move your money out of that savings account. But the real fear should be the thought of working until you are 75 because you are too afraid to invest at 50. You deserve a retirement that is defined by freedom and options, not by budgeting and scarcity. You have worked hard for your money. Now it is time to make sure your money works even harder for you. Automate your investments so you do not even have to think about it. Set up a recurring transfer to your brokerage account every time you get paid. Treat your future self as the most important bill you have to pay. Because at the end of the day, nobody cares more about your financial future than you do. The institutions and the banks want you to stay in their safe accounts because that is how they make money. They take your deposits, pay you a tiny bit of interest, and then invest that money for themselves at a much higher rate. They are using your money to build their wealth. It is time to stop being the fuel for someone else's machine and start building your own. You have the power to change the trajectory of your family's life for generations. Wealth is not just about the numbers. It is about the peace of mind that comes from knowing you are in control. It is about the ability to say yes to the things that matter and no to the things that do not. The journey to independence starts with a single decision to stop being average. Because the average person is broke, stressed, and afraid of the future. And I know you are not average. You have stayed with me through this entire discussion because you want something more. You are looking for the path to true security. And now you know where it begins. It begins by stepping out of the safety trap and into the world of intelligent investing. Take that first step today. Your future self will thank you for it. Thank you for being here and for taking your financial future seriously. We will continue to explore these strategies together as we move forward into this new era. Good luck on your journey toward freedom.